Okay, morning guys. Well, good afternoon actually. Just make sure. Right, now we are good to go. Now let me know if you can hear me. I'm guessing I'm coming through nice and strong. Bobby and Pete, how are you guys? Hope you're good. I got your email, Pete, and fantastic. I think it's a very good question, to be honest, and it prompted an idea for another video. So we'll step into that. All right, so a few more people coming on. All right, all clear. Let's just get up and running. Welcome to TradeSetup and live stream. It's the 6th of July. So markets got off to a cracker this morning. Well, not so much the Aussie, the ASX, but it looks like the Hang Seng is racing ahead, and the Dow is getting ramped up again. So they've had a day off. They've missed the ramping on Friday, and they've continued to push it higher today. So the Dow actually opened up a little bit stronger than expected, and you can see that's dragged. I mean, the Asian markets and the Dow the aftermarket Dow, which is their overnight futures now, has dragged our index back up again, back into positive territory, I think. So where are we at the moment? Up 3 points. So this is the SPY. We had a good little trade on Friday. I'm just going to find out where it was, and it turned out it could have been a hell of a lot better, which is a bit of a shame, but that's the way it happens. Then we had a short on just in here, so that was an alert out that went out. I hope some people got onto it. Short off the shoulder there, so we've spoken quite a few times about the shoulders. You can see that the market's popped up, had a lower high and another new high back up to this zone, and that's when you see that kind of action and it's below a key sort of a level. To me, that's just more of a trap. It's trapping in, bringing some buys, and turns around, squeezing back out in the afternoon. We had a big sell-off, so we spoke about this, I think, in the morning for the alerts. I sent it out in the morning saying just be careful. We could get have a bit of an unwind coming into the weekend, and the US was closed the night that night, the Friday night. So I was looking for that bit of an unwind on our share market during that session. It did. It opened up strong and then just sort of grind down all day. And that's what produced that lower high coming to play. It was about 11:15, just after the Asian market opened. The Asian market, Hang Seng, was actually strong. So we got sold off. I think they did back off a bit during the session. I can't quite remember. Have a look at that later. The shoulder worked it down. The exit was probably, I think it was somewhere in this. It was two green candles just in here. Actually, it was at 60.33 from 53, I think, all up. So it was a good trade, but I mean, it continued to go on. I did miss this entry just in here off the shoulder, so you can see that that trend down was still continuing. It was into a zone. I think it was into a support zone. It just pushed through, through these lows, and then we bounced just back above it. And that's gonna, you're gonna bring in a few buys thinking that's gone through the low. We're gonna, back and fill, meaning we're gonna grind our way back up to those highs because we've done that many times before. But when you start holding, you know that there's gonna be a few more that's gonna get squeezed out, and that start to take out that low triggers anyone that held it through this pullback. Triggers them back triggers them into action to have to, okay, maybe there's going to be a bit of an unwind today, a bit of a trend day, which it did turn out to be right in the last 5 minutes or so when the market popped back up to the close. So it finished around about where we exited, I think about 33 mark. So, but we missed out on, an extended another 10 or 15 or 20 points on the downside, which is a shame, but all in all, it turned out all right. Now today on the SPY, this could be the play. I'm just going to keep an eye on this. I won't trade it, but a bit of an extension because, like I said, the Hang Seng is flying. You can see the Hang Sengs. I didn't expect this. It's popped up. They have a few minutes, and then they close until 11:15, and the Dow was up at that stage, and the Dow was continuing to push higher. So I think the Hang Seng dragged it up on there just near the open, coming to the open when people could see the match off on the Hang Seng, and then the Dow pushed up. This is gapped up above 25,475 and just continued on. So this is another level, 25,800 thereabouts, and it's just blown straight through it. So the Hang Seng is doing very well at this stage, but it doesn't mean that we're going to kick on with it. It just may be, they're very bullish at the moment, and the US is going with it at this stage. You can see they gapped up. They were trading around here. Now we were looking for two things. Either you're going to get a bit of a sell-off and close that gap, because there's still a lot of negativity. There's still a lot of reasons why they should be selling. But I think the one thing keeping them going at the moment is just the continued stimulus in the US. So it's popped up, had a bit of a pullback to this inside level at 28,880, and I thought if that holds, it could just continue on. Didn't expect it to jam up through the 26,000, and we're up probably, that's good, from the close on Friday, which was, what time was that close? 3 o'clock in the morning, I think they closed early. 700, about nearly 300 to 400 points. So it's a decent rally. You know, we're in a decent rally at the moment coming into the European Open. For whatever reason, I'm not sure. I think someone was mentioning potentially they've approved stimulus, but I haven't seen anything. That's the reasoning behind it. I think this US market, they are happy to ramp it if the Asian market's going strong. So they'll continue to ramp it as long as the Asian market's going okay. But our market doesn't seem quite convinced of it all at this stage. So we'll see how that goes. Like I said, if we can get, there's potentially a buying here. You stop just below that candle as long as it finishes. So it's about to finish. That candle's about to finish in 30 seconds. If I hold this high, there's a potential just buy. See if I can get up through these highs. I mean, it could easily just turn down and you pop up through, drag some buys in, and boom, straight back down and stop you out. It's only it's going to be about an 8-point stop or so. Nothing too major. It's just more of a scalping opportunity. But this, if we can start to hold this, for a bit longer, and sort of in the afternoon, we could have a bit of a rally on our hands in the afternoon and making back some of that lost ground from Friday anyway, coming into the US. So the US is open, kicking off tonight about 11:30. So there could be some opportunities there. That's about it. The Aussie, the Aussies, I thought we would have had a better sell-off. In all honesty, I'm not on the hourly chart, am I? I'm probably on. I'll go on the hourly chart. This could be the minute. Or am I? Just bear with me 1 second. Yep. So it had a sell-off. We're looking at it here. So there's inside levels everywhere. We've got an inside level resistance zone, which we're basically jamming straight back up into that zone now. We've had some, good buying there. The Aussie's not going down unless the overall market's going down. At the moment, it's well and truly linked to equity markets, and it'll continue to do that. Whether right or wrong, it's irrelevant at this stage. The markets are going up. The Aussie's going up. We don't really. The RBA wouldn't want to see a stronger Aussie, but what more can they do apart from cutting rates? And they can cut rates, and it can be back up there anyway. So they've, I don't think that wants to happen. There's no real need to cut interest rates. I don't think inflation's out of hand at all. It's just the Aussie, and I'd rather. For exports, having a weaker Aussie. But it's just not working out that way because the US dollar is in play, and that's the key thing that's in play at the moment. So we'll take a look at that. What is the US dollar doing? I haven't got, actually I might have a couple of things on the CFD. I found some prices. No, I don't think that's a fit. That's CFD price. It's a 4-hourly chart. Just change that over. So there's weakness coming to the US dollar, which if you're going to continue to get these markets just keep grinding high, through Asia, and then they pop into the European session. I mean, whether it gets sold off tonight, who knows? But the US dollar is going to go down. Gold, you would expect is to find some buying, but it's not really moving anywhere at this stage. It's cleaned out. It basically did nothing on Friday night because you knew everything was closed up. It's flushed out this low. And if the US dollar keeps grinding lower, you would expect some buying support into gold and to take out this high around 1777. And it's done the clearing out, which it does time and time again, like we saw here before it popped, here and it popped, rallied up. So there's a good chance that if we do get up through 77, it's continue on up to these highs, especially if that US, if the Dow continues on strong and the US dollar holds, or at least pushes lower, continues to push lower, which would put upside pressure. And it's not really anything to do with safe havens. I mean, it's just US dollar based. Now, I will be interested to see what happens if there is, like I said, many times I'm expecting a sell-off. I'm not a big believer in a V-shaped recovery. I don't know how that's possible. And there was a good article I was reading this morning, something about a lot of analysts are saying that, the numbers are coming out fairly good, okay? And we're the market factors everything in. So if those numbers start to stagnate month on month, they start to ease off, and there's no real gains or losses. They're going to be a lot lower than where they were before the sell-off. But our markets are pushed right up. They're sort of anticipating to be exactly back to where we were before the sell-off, prior to the sell-off. Now, if we don't get there in the way of economic numbers, the data's still suggesting there's 10% unemployment in the US, and it come from 3 or 4, and there's a lot of job losses. There may be continue to be some more job losses down the track. There's a lot more stimulus, a hell of a lot more US dollars in the system. So there's still a lot of problems. Why should you just got to look at it, weigh it all up. Why would be valued up here on shares? So that for value investors and all things like that, I guess in the US, there could be a bit of selling if the numbers start to stagnate and they start to, overly. The market never factors in perfectly. You either factor it too far on the downside, too far on the upside, and I've got a feeling it's too far on the upside at this stage. But you've still got money coming into the hands of your new retail clients that are sitting around doing nothing in lockdown. In Australia, we've got super money coming into the people. I don't think they're using it. A lot of people are not using it for the correct means, or potentially there's a lot of new accounts that start up in the way of retail online trading. A hell of a lot more new accounts. So where's that money going? Going to the stock market, and it's quite easy. At the moment, they're kicking high, and I've been caught off guard by not anticipating the strength that's come into this market. There's not too many stocks that look fantastic, but I've just been going through a few now. They look set like that could be if there's another leg up, they're the ones I'm going to be keeping an eye on. So we'll go through those in a minute. But yeah, there's still money's flowing in, but if those, like I said, if those numbers, if we start seeing the economic data comes out and it's relatively flat, there's no big, we're not going from 11% unemployment down to 8 or down to 7.65, that sort of thing, which I do not expect. There's going to be people that are not going to come back to a job, and that's just the way it is. It's the way it's going to happen. So that unemployment number won't be moving too quick. Now, if they go back into lockdown, what's that going to mean to the jobless rate again down the track? The longer businesses are out, the more likelihood there's going to be more foreclosures. And I think in the US, there is quite a few bankruptcies that are still coming through. For some reason, it's not getting factored in by anyone. The market just wants to be higher at this stage. And that, who knows why? It's just you don't argue with the bull market. But it looks like I said, the Dow's getting ramped up at the stage at this, where are we now? Ramped up here. Didn't expect that to come out today and just power higher, but it is. So what we'll do now, I'll just go over oil, the things we normally look at. Any questions there, guys? Anyone else is playing around at the market at the moment? We still have, there's still some opportunity. I'm not saying there's not, and I'm just very careful at this stage to start loading up. And the higher it goes, the harder it gets to sit here and just watch it. And that's why we've been getting more into intraday, because intraday you can be in and out. There's opportunity there. There's a lot of opportunity. You don't have to trade every day, but if you can trade a couple of times a week in and out, we made some good points on Friday. I've been doing it intraday anyway, and chipping in and out. It's been going quite well. So we're going to start to do a bit more. It's just got to do with how do we sort out with the alerts coming out, how fast and slow it is. So just beware if we start to push out more alerts, which there will be on the indices, intraday trading. I'll try to prep it by sending out the morning alert with what we're actually doing and what we're looking at happening. So just be wary that if you start to see, I said that could be a high low starting to build, and it looks like there is, but I haven't sent out an alert. Just be wary that there could be one to come out. So sometimes it might be a lot faster than you'd expect. When things work out, they work out pretty fast. The one on Friday was quite good. When we had the order in, it didn't take too long for it to kick off, and it never really looked back, and it just continued to go down. So that was, it was a beautiful scenario, but they're not all going to be that slow, with the intraday trading. But so if you're interested, just be wary. You might have to be on the ball a bit more than your typical alerts that we've been doing. So we're looking at here, there's a Dow. Let's just go over to things like your crude oil, which, it's stuck around this $40 level, thereabouts, give or take. We're still holding these inside levels like we did on Friday, but again, not a big session on Friday because US was closed. They don't have much to go through once the European sessions are quieting down. Asian's gone. There's not much to follow on, but you wouldn't expect a bit of a flush. The market loves the flush no matter what. It's just how far it flushes on if the US is open or not. So a little flush, held up, and then back to where it started. So it pretty much finished and started at the same, around the same area, around that 40 mark. But there is buyers, and they're happy to hold it up, but it's not getting on. So if it pops up above that level, it's getting sold back into it. We flush on the lows. So crude is not really telling me too much, but it is saying that longer term, if this does the way this is grinding up, it's quick to sell off here. That if you just go and look at that leg up there, you look at the steepness of that move, okay, and then the steepness of that move, you can see it's not quite as steep, and then this move is definitely not quite as steep. So you can see that the buying is a lot more tentative. It's getting more tentative too. To me, that looks like it potentially could roll over. I mean, if that's going to roll over, then you're looking at people worried about demand, worried about everything else, and then that means you would expect if that's rolling over, equities are going with it. Shares, risk is coming out of the share market. Or if we could consolidate here and then bang, off we go, and there's another leg up, another major leg up in the US, along with the European markets and us, the ASX. The ASX is notoriously a little bit slower to kick on than other markets, say the US and Europe. It will go. Looking at copper again. Copper's backed off, but that longer term trend is the one we're interested in. I mean, you can chop around as much as you want. It blasted up into new highs, had to back off. It's consolidating, or potentially holding up what you can see around this zone. Tested it, retest. So if this is a retest fail, so we just sent out the video on that, by the way. If this is a retest fail and we're going to hold there, we'll be looking for a higher low, potentially a bit better than what we just saw in here, because it was a fairly quiet market. But if we can get something like this, that would suggest that we're going to see a lot higher prices, and we're going to at least attack the previous highs, which is up at 2.766 from 738. Or that to me suggests the better, more constructive, and the longer it sort of takes for that high low to play out, I think the better the move high, and I would expect it to go through that high. And again, that suggests indices are going higher. So if crude pops up, copper's going. They're looking at the increasing in demand, and the markets are going. Increasing demand is only when we're coming out of we're recovering fine. All right. So if we go back into lockdown and things get shut down again, or there's states in the US that are getting shut down, but if that continues on and those numbers continue to grow, then it'll be interesting to see how it all goes. Okay, Neville. So that's your copper. I mean, we'll continue to watch on that. Bonds, when sell off like that is obviously when your yields are anticipating a inflationary inflation to lift a bit. So if you got bonds getting sold off, that's higher yields, meaning lower prices, higher yields. There's no real safe haven in bonds if they're starting to sell off, but if they start to lift again, there's more of a safe haven nature to them. And people are buying for that safe haven nature, which means that obviously there's concern about the markets overall. So that sell-off, it sort of works into what we're seeing at this stage with the markets rallying today. So that's probably about it. We've looked at the dollar. Did we look at the dollar? Yeah, looked at the dollar. So the dollar, to me, we've got a double top up here. Or we call it, like we said, the retest fail. It's probably going to go to a bit of a longer term, got an hourly. Could go to a 2 hourly. What you're seeing is this action here. So you've got move up, pullback. So you've got a pullback which cleaned out a lot of these buyers up. Retested this low at 96.40. We push back up, we flushed out. So as soon as you flush out and you build your lower high, you're concerned that you haven't really got a minor pullback on you. I'm anticipating a bigger pullback. Okay, and that's why anticipating this is going to hold at 97.35, and we're starting to roll over. When we could take out this low at 96.80, and we're heading back down to sort of this support zone, this key support zone down here, even lower. So that works in well for the US with a weaker US dollar. Doesn't help the Aussie, which is probably what's keeping our overall market a bit more buoyant. But then again, lower US dollar, higher commodity prices, which supports us anyway. So it's a mixed bag, very much a mixed bag. I think commodities are kicking on at the moment. Commodity stocks on the ASX are doing okay. And I think we've got a few on the list, which we'll take a look at in just a second. I'll just be a second on that. So yeah, the US dollar, if that's the case, I mean, we could easily hold up here. We could get something like this, another sell-off. We got to don't forget all this. If that's the lower high we're concerned, that was a big spike up, pullback, consolidated this low. We've pressured down, taken out this key low, all right, through here, and now we're consolidating again. If that's the case, we've got a serious lower high in our plates, and we could be eating a lot lower, all right. We could be heading all the way down to 94.65 or thereabouts. So it's quite a lot lower, which would be interesting to see. But I don't think if the market's going to sell off, we're going to see those lows. We're going to get another bit of a spike back up in the US dollar. But again, nothing at this stage is really changed from the last few weeks. The market still wants to go up, still a bit bullish. Now that's US. So what I'll look at now, still kicking on. Oh, look, SPY has kicked on like we were looking at, but it's not. That's not convincing. When you break up and you sort of go sideways, I would rather see, if you're going to get bullish on something like this, you've got to be wary of this kind of price action when the market, you've got the push up, you've got the pullback. Why isn't that working? It's the wrong one. Delete. Let me just get rid of all these. Just want to show you what I'm talking about. And this is the beauty of intraday trading. Can really sharpen your technical skills, by the way, because you see these patterns that they play out on the daily, they play out a lot quicker, and you have more practice essentially. So it is kicking on. Whether we get through that high is a different story. 60-40, we're only 3 points away. That probably drive through that in a minute. But it's hard to, when you're up at a certain level like this, and you back off. Not that one, that one. You back off like that, and then you sort of pop up and you go sideways. This really choppy action. That's not too convincing. I would much rather see the market push up, pull back. If a nice good run, and then that pullback, and then if we can get that, well, I go too fast, don't I? If we can get that supported in here, that's what I'd love to see. That because it means that that spike back into resistance, it could easily turn around and be a lower high. But if you get it soaked up again, that's a good zone. Whereas this hasn't. It's sort of pulled back and just sort of grinding back up again. And I think everyone's just focused on what Asia's doing, what the Hang Seng is grinding up. It's not clear-cut price action. It's not where you've got to. For me anyway, if I'm looking at this 5-minute chart, I haven't got a clear entry. There could have been an aggressive one just after the open. 11.15, what was that? That candle there, 11.25. But I don't see that as a high probability because it is gapped up quite strong. So to buy into something like that, it's very, very hard. It's hard to make. You've got small risk, but who's to say that when you're not going to gap up, flush in and straight back down again and get stopped out? So that to me is not a setup at all. And like I said, I'd rather see it pop up, the pullback, and any pullback supported. But instead, it's popped up and it's just continuing to grind. It's continuing to grind and then accelerates. Sort of grind, so a bit of a flush, pop straight back up again. The next candle, grind, and we're starting to rally again. Okay, so the intraday trading is a bit tough. There is opportunities, sometimes they're really not clear cut at all. So this is a Dow. We're just keeping on that. That went a lot, like I said. I only got it to 2,600. I wasn't expecting it to blast through another couple 100 points. Right, so start putting in some stocks or whatever. If there's something to look at, whack it in, and I'll get up. I'll get up this here. So the first one, I'm just going to chat about some Aussie stocks for any of the Aussie traders. If you're an index trader, we've had a good chat about that. If there's anything else you want to look at, even if it's a different time frame on the indices, just whack into the chat and we'll get through it. So this is ORE. I know it's a lithium play, I think, but it's looking good. That's not looking great, to be honest, but it's this sort of setup here when I like to see it pop through the MAs, all right? Like we got here, pop through these MAs, hold. And if it starts to hold here, like we did there, I mean, that wasn't the world's best setup. You could have easily just bought it on the break with your stop below, and you've got this play out, which is great. Obviously, in hindsight, and we hadn't broken, let me draw that, any significant level. There we go. There we are. So here you've got this level you're playing out. This is a great little setup, but it was a tad harder because you haven't really, there's no reason why you can't pop up and just come straight back down. So if you just bought it there on a candle formation, as in by candles, I mean, so you've got a few candles down and you start to hold and you bought on the break of this second candle back, which actually legitimately good setup, especially if you know there's continuation. If you're looking for continuation, that's a good little setup. That makes sense. It's all based around candles rather than through the high. Then when it's worked out that time, but this is not really a trendy market. You've got a sideways ranging market when you would have bought it. It's worked out fine, but there's sometimes it just would pop up and come straight back down. So you've got to be careful of when you're using this style of entry. If you're using a break through the high, then you know you're coming off a lower high, and the high is that high low is well and truly in place. If you're looking for a break like this, actually I just drew it up. So you've got the high, pullback, you've got this resistance you're coming into, but if you buy it on the break there, you risk below, you know that that high affirms, that high low is confirmed, you start to break out of the range, you're anticipating that break out of the range, and it played out great. But here, what we've got is kind of this minor consolidation range through here, washed out the lows, and then went straight back up. So that's great. That's a good move up. And what we've done, we've obviously come down. We've got buying support back at that zone, essentially. It's about 220, 224, thereabouts, and we're holding it. So you've held it once, twice. So if we start getting a high-low play out here, and that's what I'm looking for. I mean, we all know the setup. You've got that pop, pull back, if I can draw that properly. That's it there. And if we start to, so we're about here at the moment. If we start to, even pop up, I'd love to see it pop up a bit out of that contraction, and then ideally, if we can get that high-low come out. Okay, so if we get that high-low, there's an entry there and you know exactly where your risk is and you're gunning for at least a break of that high, and it could be 1-to-1, it might be 2-to-1, a break of that high, and then you've got on the cards up somewhere around 380 or thereabouts, even higher. So that there is starting to form a nice little high-low, and there's, if you look at, mouse is gone, goes onto the other screen. Here we go, it's back again. If you look at the weeklies, nothing flash. It's just if we can get this volume start to lift again, it's a decent volume this year. If we start to get that hold, and that even on the weekly, it's not too bad. It's a minor double bottom here, if you can see that. This minor double bottom, if we start to lift, ideally on the weekly, is confirmation through that high at 260. What's the high there? 264 on the weekly, and then that would suggest you're gonna break through 3, and you're looking up to 4, on the weekly charts. Even, this is something you've got to keep an eye on. If you're doing it that way, just be wary that this is not the play, and you don't get caught. So don't just, you've got to mark up everything. That could be the play there. You get through 3 and you don't get much higher than that. You might pop up and then go into a pullback because you're touching on this trend line. So just be wary of that, if that's what's going to, what could play out. But, or it's just something, there's another pop up and then bang, we come straight back down and take out the lows. But either way, I like that on the daily, and it's worth a nudge on the daily if it starts to play out. Now, the others that I've been looking at, PLS is something that I hope it's not kicking on now. 29 starting to lift. I don't know if it's an intraday one that I was looking at there. Yeah, there you go. Off she goes. So we'll keep an eye on that one. So that there, the good thing is when you sell off here like we did in March, we've come all the way back up to these highs at 40 cents. If that was a weak market, you technically shouldn't be there. You shouldn't be getting back up there, you would expect. If there's weakness and there's more, so basically by weakness, the selling's not done. All right. If the selling's not done, people won't wait till it gets, they might be selling there, which they did, or they might be selling, with this in here further, and they wouldn't let it get much past that. You don't think? I mean, they're not just going to sit there. If you're holding from up here and you're seeing this weakness come in and the market's still not looking so crash hot, and if there's a lot of sellers on the sidelines that want out and just waiting for a bit of a pop, then there's more than enough opportunity that they could have sold it then. But the fact is that they didn't, and the market's actually back up to that 40 zone. To me, is a good sign, because now we're starting to hold this high lows back into it. And if we've got, there's not much of a setup there, I'd just rather see it pop up and pull back and then get a setup for a push up to 40. even a breakthrough 40 minute, that could be on the cards. All right, so it's not as I find as good a setup as what we just were looking at a minute ago on ORE. As in on the daily chart, it's sort of a pop-up grind. You're still holding these MAs, which is a good sign. You know, the MAs across, it's gone above the MAs, sort of held just around it, just below. Okay, can you hear me now, guys? Sorry, just the phone call come through and it's in the same headset. Am I buzzing noise? It's probably me rambling to someone. All good? Yep. Oh, fantastic, fantastic. All right. Now, where were we? So we're looking at this Pullback. Now, the weekly is not suggesting anything flash, but it's just that you see how it's that, you know, when they come straight back up to that 40 zone like we saw here, I start to look at that as more as a flush out the lows, you know, that fear-driven sell-off. And if we start to respect higher levels again after pushing right back up, then to me, that's not a bad sign, okay? You could probably look at it here and it didn't work out. That's why it's important to look off your higher levels, your higher lows. You know, higher lows for confirmation, you're not the only one thinking the same thing. There's more people on the sidelines ready to jump back in and ready to take price higher. Now, if you don't get the higher low, which you didn't really hear, that's why you got that bit of flush lower, you know, through that 40 zone here, and it start to lift. Again, not much off that zone there, it just took off, but we'll just keep an eye on that one. Now, what's the others that I was looking at? MAH, I'm not a big fan of it, but that's I like the way it's come back up, and I like this kind of there's higher lows holding and lower highs. Now, whether there's going to be much in that, when you're looking at just the daily here, if we start to rally, you take a step back and think, well, where could it go to? Is there anything much on the weekly? And if you step back to the weekly, that weekly's not looking too bad. I mean, it was looking good up until we had that sell-off, and that sell-off took out that 15, 16 zone. All right, so that's, you know, the reason behind it. It could have a lot more to go, you know, just by looking at that weekly chart. So that there was that zone, it flushed it out, we popped back up, and potentially we're going to continue on with this work we put in for the last few years, really. Bit of a pullback here, rallied up. So this positivity maybe it was set to go off this high low and continue its way up until we got the coronavirus problems, everything went into lockdown, and bang, it got smacked. So that there is more of the memory of what's happened in the past. We're not really going anywhere. It's hard to make money on MAH. We've had that pullback, that sell-off. We're back up these highs. You know, we actually got through that level, and it was looking to consolidate that level and go again. Is the way I'm viewing that. And it's just that sudden thing that no one saw coming in the way of the, you know, the COVID-19 sell-off, which smacked it down. And that, you know, that smacking down, you can understand because it's got a bit of a, you know, traders got memory. Don't forget, and they remember this pullback here that retested up here and it's failed. So they're looking at that going, okay, it's failed. Got soaked up here at 15, which is nice. So if we can start to hold this, there's no reason why we can't be back up at 30 and through 30 this time around. Okay, so the weeklies, you got that contraction in price, and contraction is always a good thing. If you're seeing contraction where higher lows are holding and lower highs are holding, you know, no market comes to a point of agreement and stays there and everyone's happy. Okay, nothing does, because you don't make money if you're a buyer or a seller. All right, so it's got to go one way or the other. You don't know which way is going to outweigh the other, and that, you know, which of the bulls or the bears are going to win out. but you do know one of them will win out sooner or later. And if you got your analysis right, where it's coming off this low, we're contracting in here, things are looking good. I'm just thinking, well, all right, if we go back to the daily, if we break out through 26, I know who's going to be winning. It's fairly clear from there. And then it's about a simple fact of managing your risk. Right, so if we've got this is the contraction we're looking on the weekly, we know we've got highs to come into potentially, which could cause a bit of a problem, but there's a chance that we just blast straight through there, especially when you come up into the zone but you fall short, like we did here at say 28, and we're still consolidating below it, or potentially consolidating below it. That's a good sign. It's not a bad sign, and I wouldn't. And that's where a lot of the time they can just blast straight through. They don't go back up from here, consolidate below, drag in some buys, and then just go up a few points and stop. It doesn't happen. I mean, it can happen, and it has happened, but it's not as common. All right, so that's what I like about that MAH. We've also got ELO, which I think I noticed today. It's probably just kicking on now, which is a shame, but big flush, bounced straight back. The way it bounced back was quite strong, back up to these highs at $8. Now we've had the pullback again. We're consolidating, so the market, at this stage could have still been wary that we're going to have another sell-off, but it was consolidating around here. So there's accumulation in here at 650 through 650, and we're heading back up again, and we've pulled back accumulation and minor accumulation around 7, and we're up again. So there's a chance that this just goes through straight through 8, and if we just go back to the weekly to see what could be happening, that's a key resistance zone. Through that 8 level, if it's starting to build, just imagine what sort of buying that's going to drag in. You can easily drag in quite a few buyers to push up and through 8 off that high low. Okay, so we wouldn't be the only ones watching this level. It's reacted off that level. What are we, back in 2018? Pull back, reset, straight back up, didn't quite get there, pull back off a high low, went straight through it. Started this year before we got the major sell-off. So at this stage, it was probably set to pull back and test 7, drag in some more buyers and go straight up and through. But we've had the curveball thrown of COVID-19, and that's why we got that big sell-off. So anyone that's sort of buying it through here, obviously the fear-driven market sort of negates a lot of levels. You start to forget about a couple of levels below. You start looking a lot deeper, because when it's fear-driven, things tend to go a lot deeper, but they still can respect levels consistently. Right, so this, to me, if we consolidate here and we start to get minor high lows, even on the daily basis, high low start to hold, that could be enough to drag it up and through and spike through that $8 zone. Bank of Queensland, I don't know who likes banks at the moment, but that's, we've had a big sell-off in March, and even before that, it started, back in September, October last year. The market wasn't looking too crash hot. Big sell-off there, big sell. So that there, you've got all these buyers through here, slowly edging out, and then we've got a bit of a sell-off into the end of last year. It was starting to hold up, and then COVID-19, you just sort of, anyone that was holding, to me, is being flushed out now. Right? And that's because, this wasn't a stock that was going up and got caught off guard and everyone dived out of it. It was already going down. So the pressure was on here. So if you're holding here, it's, how do you say, it's only your baggies are happy still to hold it, especially if they're buying at $12 and they're sitting around at $7. If they're going to hold down to there, they're going to hold anyway, no matter what. So what we're suggesting, when you get this kind of sell-off, it's these buyers, these late buyers that bought it up here, they got it wrong, squeezed out. A few bargain hunters here, squeezed out again. Potentially they were looking to buy off this level, not much of a level back in this zone from way back in 2012. They were looking, basically trying to pick a bottom. Not many people do that, so it's not a massive amount of quantity. And then the COVID-19 hit, and they've been squeezed out and put them back on the sidelines. So what I'm saying, if there's any selling, I wouldn't suspect there's a lot more selling to come on Bank of Queensland. I'd suggest a lot of it's been done, and that's because it's been coming down for the last 2 years, really. So if we got this big flush down, that sort of capitulation, that's the way I'm viewing that. If we can start to hold this level above 6, we could easily attack 7 or back up to sort of that 758 zone. I mean, even if it doesn't go much further than that, you still got, 30% rally, if you look at it that way. If you're holding above 6 and you go back up to 8, 9, what's that, 2, about a third, yep. So give or take 25 to 30%, could be on the cards on the upside. right? And if it doesn't go up past, say, 7, then so be it. You might have to just bail on that for a small loss, small gain. But if it does, I think there's more upside in that. The fact that we've sold off and we consolidated through here, the markets were still fearful there, and we just went sideways, basically consolidated sideways, and then we started to ramp up. High low just off the MAs there, and we've ramped back up. Now we're pulling back, we're consolidating again above those MAs. Now, we've spoken about this many times. If you see volume starting to come off and it's going sideways, that just means there's less and less activity on the downside. Prices essentially going sideways. There's no one coming in that hit any more sellers that are willing to just get out and jam it lower. And you can see the pressure from the sellers. This is the way, if you don't know the pressure, I'm looking at stochastics more as a pressure gauge from overbought to oversold. You go from overbought down to oversold, but price doesn't go anywhere, it goes sideways. That's suggesting when it starts to lift again, when the buyers eventually step back in, it's going to go up because there's not enough selling pressure to overwhelm the buyers. Okay, so that's why I'm viewing Bank of Queensland. I think that's got potential upside, maybe a break. And again, I would love to see a higher low, even if it's on a small scale, play out. But at the moment, it's still being capped at 650, which is only 10 or so cents away at this stage. But it could easily lift straight up and through. All right, so that's another one we'll keep an eye on. Linus, again, same sort of scenario. Big sell-off, it's come back up. We've sold off, but it's holding. We're holding through these MAs, which this is sort of your first key pullback to the MAs. You probably look at it, it's not really on a weekly. First key pullback, which could easily hold. I'm not a big fan of things that pop up, consolidate, and keep running into resistance. I'd rather see buyers come out like this, see that chop around here, and then we pull back. So we cleaned out these guys, come back into a zone through $1.80. I'll just make that a bit bigger. This is the thing that I would like to see. There we go. So we've had that ramp up there, and you can see this zone was pretty much at that stage. You broke through there, okay, it's on and up. Then we've got this consolidation through here, and we've come back down to retest this breakout zone from that previous high low. And it's holding. So if we get through 205, there's a chance. Well, I don't never say never get through there today because the market's more irrational than rational. You can see that selling pressure as we got down to sort of oversold or extended on the downside. We're holding a higher level than potentially. Well, last time we were way down there, the prices were down. The sell-off point down here. We've been holding sort of above that 50% line. I don't mind that at all. It's banging on, holding higher levels as we keep, we go on the pullback. Sellers come in, soaked up pretty quickly. Sellers come in, soaked up pretty quickly. This is more of a macro corrective price action. The market doesn't have to go up and correct back. It can actually go up and consolidate up here as a correction. It doesn't have to go into a stage where you do this before you have a next major leg up. It can correct sideways like we are here. So there's a good chance that if that keeps holding up and we start to break up through 205, maybe we'll retest when we pop to 210, 215, retest 205, could be a buy. Look for the buy on the rise. You might even have to go down a time frame to say intraday to a half an hour chart or something like that. But excuse me, there could be something, well, there's definitely something to keep an eye on here. All right, so we've got that. Next one will be so that's not actually, they're the ones I want to cover. So we'll get into some others now if you like. So put up some stocks if you want. We've got the Aussie we're going to go through. But there's a few that I've seen now with the way the XJO is at the moment that are actually sitting there. You look at the XJO, even that's a 30-minute chart. No, it's a 5-minute chart. Forget about that. Forget about that too. It's not where I should be. Sorry, I'm going to sneeze in a sec. So and it's, I get it. I'll go back to this one here. Right, so you can see this is not a bad sign. Again, we're holding the MAs, and the fact that we pumped up through here, you've got this big candle. on a 30-minute, pushed up through here on Friday, and we backed straight off. We could be consolidating those MAs again, and we're looking to go back and retest 61, go through 61, or back off from 61. But either way, the momentum's up. We're holding the MAs. It is a bit extended up here, so that's what concerns me. The fact that we're lifting, we're still extended from this move down. So if you're looking at it at that stage, big sell-off, all right, it's holding a higher level with the moment, with the stochastics there, the pressure from the sellers from overbought down to oversold. They're holding up okay. The fact that it's gone all the way back up, so it's like the reverse. The buyers are giving it a good nudge, but sellers are still stepping in at lower prices than 61. So that's what, the market's still a bit concerning at the moment. That's why I don't want to be loading up on the shares, because the day I load up is the day it sells off. But it's got to be a really nice setup, and you've got to know where your risk is, and you've got to manage your risk accordingly. Not think, okay, if I jump in here, we're going to the moon, I'm going to give it a nice wide risk. It's not the time to give you any shares or anything a wide risk parameters at this stage, because this market can turn hard and fast. I mean, if we have a 1,000-point down day on the Dow tonight, after what we're seeing today, don't expect it to open at the same prices. Expect the ASX to gap down, or your shares to gap down, and really not give you much chance. If you don't get out on the open, it could just sell off hard. So that's, the higher we go, the less likely you're going to have much chance to get out. So let's go, we'll get on to the Aussie first. Actually, I've got the Aussie somewhere, haven't I? And then we get on to, what have we got? Zip. And AZJ, DDR. Fantastic. So the Aussie, that's your hourly chart. We'll go back to a bit longer time frame. I'll clean out all this. I'll start from fresh. So you can see markets was obviously under pressure anyway, right up until with the major sell-off, and it just capitulated. So I think that was it. It took out a key level. Might have to step back to a weekly. I just want to see what's on the weekly. There's probably not enough data coming through. Actually, I'll go across here. The Aussie. It's got a bit better data on here. Let's go. Remove drawings. Forget about that. And just let's go to the weekly. So you can see, I think that's the level. So this level here, once it got through support through here, it wasn't looking too crash hot. We're holding that, and then obviously I keep saying the GFC. We had the COVID-19 sell-off, and not only that level it got through this low, which is, I think that would have been just everyone bailing and running for cover by then. And that's more of a massive stop run. So anyone that might have been bought into that level got stopped out as well. So just a big stop run through there. This sort of flushed down, and it's bounced back quite strong. So if we go over to the daily, we're back up into this level here. Okay, so if we start from top-down approach, the thing that I've got my eye on up at this level is the fact that we've got up to this high. So if you just forget about that zone for now, we're back up. Obviously, with that kind of big flush lower, you're going to get a sharper move back up. And obviously, with the US dollar, that was compounded by the US dollar rocketing higher. Back up to this level, we flushed it out here. What was that, a few days ago? Say middle of last month. Okay. The thing is, we are holding higher lows in here, which is, look, it's not a bad thing, I'll say, but it's a bullish sign more than anything else. It's just, what are we? This is the support I've got through. I'll start dropping it down now. There's not much to talk about in that. If we go down to 2 hourly, you can say we're getting supported the high lows through here, and it's starting to it's still respecting this trend line while we're starting to jam up. The problem is we've had some selling, so whether we're going to get some consolidation just below that 70-50 zone, and we're looking for a squeeze lower, but like I said, I don't think that squeeze lower is going to happen unless the US falls apart. And until then, if the US, it's like lockstep. So if the US goes up a few points, the Aussie's going up a few points. The US goes down a few points, the Aussie's going down a few points. It's really locked in well to the equity market and the US dollar, they're sort of going hand in hand at the moment. So it is choppy action in here, which shows a bit of uncertainty. It's not as clear cut as buying through that break there off that high low, looking for your rally, buying continuation, and up we go. Whereas here you had no real resistance zones to worry about too much. Whereas here we've got a massive resistance zone up at 70.50, and we've got this inside level at 69.70 that we could be running into. So two things. I don't want to be buying up here in this resistance zone. I wouldn't just buy in a short-term consolidation, a short-term continuation pattern off a high low into a resistance zone. I want to see a major corrective action. I want to see some buyers step up to the plate. So if we get something like this, I'd rather see a good flush and then a bit of a squeeze, and then I want to see the sellers start to build. If you get lower highs coming in into this rising support, that sellers popping in, but it's getting soaked up quite well, and all you're looking for is a higher low to hold, a breakthrough, and then for those sellers that just been building up to get squeezed back out of the action. All right, and that way you know exactly where your risk is. If this is what we get play out, and we've got 2 or 3 to 1 back up to these highs, great. Okay, back up to 70.50, but until we see a big flush lower to squeeze out some of these buys, I don't really want to jump in long. All right, and the same token, there's nothing to say jump in short yet either. We had a good little trade, well, not a trade there, but we were alerted to this. It didn't quite play out, but if you manage to top high, double top there, retest fail, you've got our shoulder that we always talk about through there. If you sold the break through there, great. All in hindsight, that worked out. We were looking at something there. I just wanted to see a bit more. I wanted to see that pop through, pull back to get another shoulder, and just jump in, because once it breaks there, I think there were going to be a lot of buyers that bought it up here into this resistance zone to be squeezed out, and that's what played out. Then they started soaking it up at a lower level. You can see through this zone here, soaking up, and we're lifting again. So we're back into this about here where we were last time, back on, say, the 23rd. We haven't really failed yet. We're pushing up into that zone. We haven't failed. We need to see, rather than a big pullback like that, if you're wanting to get short off that zone, I'd love to see a flush through and then a pullback and weakness. So it's just basically the reverse of what we were talking about here, but without that pullback, if that makes sense. So you want this to happen, consolidate up at that zone, and then sellers start to edge in. You don't expect you can get a short off when it just up straight back down again. And it's going to be hard work to get short in some sort of setup like that. You may have to drop it down quite a few time frames, whether you're looking at the 5 or 30-minute chart. All right, does that make sense? Who has that on the Aussie? Oh, Bobby. Does that make sense, Bobby? If we just go back to, delete that out, what happened at this stage? See how we got pop up here, we've got a pullback. So that pullback, if you're buying it up here, nothing wrong with that. We haven't broken any clear level, even on the 30-minute chart. Okay, we haven't broken a level with this pullback. Holding that flush lower. I don't know what that was, that weird sell-off one day, and it bounced straight back again. So you can sort of negate that. Got to pull back, hold a higher low. This was the last higher low that was in force at that stage when you popped up. Little minor, ever so minor double top. I don't put a lot of emphasis in these 2 wicks. It's more of just retesting. It has to have a bit of a pullback. We've got the pullback, so at this stage, it could be bullish. It's just another continuation pattern, but again, we're into that resistance zone. So it would have been, I wouldn't have bought it into that resistance zone there. But it was continuation. A lot of people would just go, okay, I bought it. I'm just going to follow the same process. Higher low, higher low, higher low. We've got another higher low coming to play, and then we start to fail at a lower level. So that is key. That is key. Just 1 second there, guys. Don't care less. I'm talking down the mum. Hey? That's fine. I can't do anything there. Okay, go to mum. Tell mum I'm working. Livia, I'm working. God almighty. Yeah. I just had my daughter come in and just tap me on the shoulder. So they're on holidays now, and she's irrelevant to what I'm doing. All right, so we've got, once you start getting that failure there, this was kind of the zone you'd want to be looking at a short. I hope that makes sense, because you've got this press up here, pull back. This you're anticipating has been a major lower high in respect to the 70.50 or 70 cent level. So that's why you'd want to be working a short off that zone there. Okay, so I mean, if that, and that's an aggressive selling entry. It's not, because it still hasn't broken the anchor. So this is what you consider. If it breaks through that, then I think there could be a decent pullback on my hands. All right, but until you break that, I mean, that entry through that zone there is aggressive, but it will be a lot better payouts also, because you're off a key level. You failed at a lower level and you're starting to fail again at another lower level, which means that anyone that's been buying it here, watching that kind of price action, watching it fail for a third time, is more often than not going to raise their stops to tighten it up. Right? They're going to start to tighten up their risk, manage their risk. I mean, if you do, of course, people don't, but if you're, you're trading the market, not just sort of, I guess, haphazardly guessing what's going on, but if you're trading the market, you'd see in this kind of price action, it would trigger a lot of people to tighten up their risk, which means that there's going to be more stops tied under this level, potentially stops tied right under this level, which if they're going to get triggered, that's more selling pressure to come in. All right, so it just means that could be enough to trigger the selling pressure you want to see, and that continuation lower. So the lower it gets, the more selling pressures are going to come in, and the more of a squeeze you're going to put on all these buys that built up in that leg up. Okay, so I hope you can see the premise behind looking to get short there. Now, if we go back to where we are now, none of that's played out. We're at the early stages. We're back up into that resistance. I mean, if we do get this pullback, hold above this level, I think that's more of a key for me. If we can hold through here, hold above there, or even if we get through it and come straight back up, it doesn't have to do that. It can actually, if we go from here, I'm going to draw all over that. If we go through here and then start to ramp back up and we get a lower high, that is what I'll be looking for, because that's a key lower high up here, and you got a lower high, just shoulder off that. Below this level, we're starting to fail again up that level, and we're going to put pressure, especially if we break this anchor to that uptrend around 69.28. All right, so we'll keep an eye on that one. And look, there might be something in it. We might get a big sell-off and go straight through this support, or we might not. But either way, if you're getting something around 69.35 and we can push down to 6900 even, or just above, you still got 20 or 30 pips to play with. And that's a good little buffer for a bigger trade on the downside. But if it doesn't play out, you still got 20 or so pips to book and then just reset. So that's what I'll be looking at on that. All right, let's get onto those stocks then. Where's my mouse going? He's disappeared. Here we go. He's back again. All right, let's just see what that SPY's doing. All right, so it's showing a bit of, it's tentative up here, but I mean, this is not flash price action. You keep spiking up, spiking up, spiking up. Look at that! Look at that grind up on the Hang Seng. That's just very hard. Well and truly extend the market when it gets even more extended. Really hard going to trade that. So we'll keep an eye on that. And it's tending to do that a lot. The Asian market, the US going with it, they just keep dragging up, ramping up into the European Open, and then bang, the European gets sold off, flush everyone out, and start again. And I know that's going to happen. So, all right, I want to get over here. So we've got, look at Linus starting to go now. It's a shame. So I think this one's actually, Linus could be a goer if we can hold a higher level. So you can see that we've got, essentially the last month or so, not really a month, is it? Since middle of last month, we've been range bound, pretty much tied between 185 and 205. Now, if we do pop up, I love, ideally what you want to see is that you don't want to see it just pull back from here without breaking that zone at 205, because it could pull back, sucker in a few longs, and then turn around and squeeze them straight back out with a move through 180. You'd rather see it pop through there, pull back to build a high low. All right, and then it's confirmation that you're on the right side of the action. Z1P, you still got that? It's holding up there. There's not much to say about that one. The fact that we've run up through this high, we've backed off what you'd expect. Weekly's not showing much either. Yeah. I don't like the couple of candles on the weekly expecting. I'd rather, for me, if I wanted to get long Z1P, I'd rather see it pull back to the MA, say 450 or so, maybe close this gap. It doesn't have to close the gap, but pull somewhere back to around 4 to 450 if we can back off. And what I like to see a lot of the times, especially when there's an extended market, try to focus on that. I'll draw it up. I'm gonna mumble until we do it. Try to focus on two legs. So if you're, what are you doing? If you're extended away from the MAs like we are here, at this stage we're not. We haven't been extended for a while. At this stage, yeah, we're extended a bit, but even here it happened. So I'm looking for two legs down. So what that does, you get the pullback. When it bounces straight back up, you get really enthusiastic buyers will dive back in. And it's a good opportunity for another leg lower to squeeze them out. So I tend to look for two legs down. And that's not going to break the trend up at all. Okay, the trend is still up. We're still coming back to the MAs, but it's on a lot longer time frame. What that does is take a lot of people back out of the action. All right, and the market's always going to need, if there's only 100 people willing to buy Z1P, and when you're extended up into the highs, there's a good chance it's 98 of them are in the market, and you've only got 2 people left that are left on the sidelines to push the market higher, and they really don't have much emphasis. So what the market needs to do is to flush some people out. So maybe say, just for example, for argument's sake, need to put 20 out back on the sidelines, and they're the last 20 people that bought it into that extension area. All right, so if you can put them back on the sidelines, and then they still believe in the stock, they might be booking a gain, they might book a small loss, but either way, they still believe that Z1P is a fantastic stock, great fundamentals, all that sort of thing. If they put back on the sidelines, that now becomes the fuel for it to continue higher. There's more than enough. 20 people is more than enough to continue that higher. Say 30% of traders back out, squeeze them out, it resets, and they're jumping back in trying to make back that loss or expect them to go straight up and through $7. So that's what the market needs to do. It's not an infinite amount of fuel on the sidelines. Not everyone likes this stock. I'm not going to buy it. There's a hell of a lot of people that won't buy it, but there's still a lot of people that will buy it. You've got to ask yourself when you're extended, how many of those people that want to buy that stock are already in or are waiting on the sidelines for a better price or a better entry, something that matches their risk reward. So that's why you get pullbacks. That's why you get flushes. That's why you need to put people back on the sidelines. Right. So what I was saying is just if you can get the market that's sort of extended, we're stretched like we're seeing on the stochastics up here. You're stretched up here. Volumes come right off. When the volume comes off, it just means that we're probably any sort of pop up and the volume's not very good. It's not a significant pop. There's not enough people jumping in on this little rally here compared to what there was, here and, I don't know, not so much there, but on that gap up. So on that gap up there's a lot of people that bought it there that are still concerned that they're going to have to book a gain soon. All right, so that's why when the market stretch, I like to see that 2 legs down. You can have 1, 2, we might fail here, we might fail a bit higher, we may not even fail, but if we don't fail, I'm not interested at all. If we have that pullback, get back to this zone, maybe 4 or so, then I'll be looking for the, your higher low to work off. I shouldn't be just drawing arrows everywhere, but that's what I'll be looking for. A higher low to play out. I know where my entry is. I know that I'm back on the right side of the market. The market's starting to lift. I'm buying on a rally rather than buying into a pullback. I don't really want to buy when the market's going down. I want to buy when it's going up. As less pain as possible. And if I have to give up a few points, don't care. All right. So that keeps you out of the market, and you're only going to put your money to work and you want to spend as least time in the market as you can, for the most amount of gains. It's the aim of trading any product, whether it's stocks, currency, crypto, anything. All right, so that's what I'll be looking for. I'm not saying we may or may not get it, but we'll just have to see. So that's the weekly. If you just go back down to the daily's not really saying too much either. It's come down, V-shaped straight back up. To me, if we start getting on your stochastics, we get back up to overbought territory and we can't get past, say, 6 or so, I'll be concerned that we're going to push back down through 5. All right, because we need to flush some of these, buyers that bought it on the gap, even this gap's been flushed. We've closed that gap there, this little gap here on that pullback, straight back up again, couldn't get through the highs. So the enthusiasm from new buyers is not enough to push it back up and close it back in the new highs. Okay, that meaning that we're probably we're in pullback mode. And whether this is the first of the two legs or we've got 1, 2, and we're going, we just have to wait and see. But until we get a higher low to work off, I'm not interested. It doesn't mean that down the track I won't be interested. You can just see this sort of rally here. Well, we'll probably get it on the daily. This support, you can see we're quite extended still away from that, the average prices, and the average price is either the MA or that support line coming up. All right, let's get on to the other two. Syria, and we'll probably knock it on the head in just a minute. Oh, didn't realise how long I've been talking. I can talk quite easily, by the way. AZJ. Yeah, it's going nowhere at this stage. I don't know if you want to hear that, Pete, but it doesn't look like it's going anywhere just at this stage. So the concerning is that it's got up into this $5 level. We backed off and we're extended. All right, you'd much rather it see come off that extension and blast through it. And you can blast through, buy into a pullback of that zone, retest, and look to see if you can buy it on the rise. Whereas you can see that level's been respected a few times. That pullback, come back up to sort of that 5, give or take, that zone reacted straight off it again. We held up, we went pop through. As soon as we got through, the next day we gapped down and finished down. Held a higher level here, and we got up and through it, and we respected it again on Friday. Respected it again. So whether we're just going to pull back, hold this high low and go through, or we're going to blast through 470 on the downside, don't know yet. So at the moment, I'll just go back to the weekly. Yeah, that recovery is quite sudden. And if you look at the weekly, we've just bang straight back up again. We haven't had to come down and retest any zone on the weekly anyway. Yeah, maybe like this, pull back, the weekly starts to hold, then you go back down to your daily for a rally, looking at your daily charts. But the weekly, again, is sort of getting to that overextended zone. Last time we were overextended, we're at $6. Now we're getting overextended at 5, maybe. All right, and again, the daily is sort of overextended. So you can ask yourself, are we going to blast through? I mean, the fact that it's getting soaked up by some sellers, the buyers are pushing it up, and it's soaked up at selling pressure again around $5. You got to ask, is there anyone willingness to blast it through, push it through, and are they going to be joined by other traders when the market's extended? So that to me is that pressure gauge again, pressure of how many buyers are on the sidelines ready to dive in or not. So I think this one's still got a lot of work to do. I'd rather see it push up through 5, push up, get your pullback, and buy into that pullback if you can start to see some support coming in again. Last one, DDR. So Dicker data's gone, and all that doesn't look. Let's go over to the weekly. That weekly, it's touched on 1, $8 level, 2, big back off. Probably what was going to go is suddenly we said that it was going to get through. Well, just get back a bit more. Take that there. There we go. Suddenly we said it was going to go through here before March, late Feb, March, we got the big sell-off, so it's cleaned out a lot of these buyers. So the fact that it's come off like that, you got to remember, even though this structure looks a bit random, it has cleaned up a lot of people, a lot of buyers from, last time I was trading there might have been April last year, I think. April last year, so it's taken out in 1, 2, 3 or 4 weeks, a year's worth of buyers. Okay, about a year's worth of buyers, so unless they're just holding, but generally that's the way I'm viewing it. So big flush out, it's come back, could have been a nice little entry there, through that candle. Daily's probably looking better, and it's taken out this high, and we're back up again to $8, and it's rejected it. This week, the start of June, it rejected it quite hard, and we've got some sell-off. Are we going to reject it again, or are we going to go through this time? The fact is we're up there. We're not extended on the weekly, which is a good sign. It's a bit different to what we were just talking about on, was it AZJ? We're extended up in that resistance zone. We're not. So that to me is saying that potentially there's some fuel that is ready to come in. Right. So ideally, I'd be looking for a pullback, holding a higher low at 725 or so. The shallower the pullback, the better. And if you can consolidate at a minor higher level, then looking for that break back up and through $8, and potentially that's going to drag straight up and through 875 and just keep going. I hope that makes sense. Does that make sense, Pete? But yeah, that's not looking too bad. You want, I mean, ideally, just look back here. I'll just mark that up. Just in here, that's what I'd like to see. You know, we've got the rally up, the pullback, consolidate, retest. It failed, come back down. We've got the bottom end of the range, pop up, pull back, hole in the MAs just below this high, and then blast it straight up and through. That's what would be great. Now, if we can sort of pop up from here, we've got that big rally. Let's pull back. You know, we chopped around here for a bit like that. We're up somewhere around here. Now, if we can, from here, just start to pull back, a shallow pullback and hold a higher level, then I'll look for that could take us, especially the longer it consolidates, say like this, a few days of chopping around just below a key level, which is up here, I'd expect it to blast up and through that high. Enough emphasis off a higher low that's going to take it up and through. All right, we'll probably call it a day there, guys. Hope all that's was good. If you've got any questions, feel free to send us an email to support@tradesetup.com.au. If you like what you hear, it'd be great if you can leave us a like. If you haven't subscribed to our YouTube channel, please do that, and then you'll see any more bits and pieces that we do send out or automatically get sent out to you, or you get a pop-up from YouTube if you're not part of the alert service. So there'll be some material we've been putting up lately, and we'll be putting up more as we go. Like I said, any questions, I'd be more than happy to answer them. Just email the support line. Take a look at our website, and I'll speak to you hopefully tomorrow about 9:40 in the morning, just for a quick update of what the overnight markets did. All right, guys, enjoy, and I'll speak to you again soon.